Welcome to Around the Track, the most exciting 15 minutes in wealth management by Dynasty Financial Partners and hosted by CEO Shirl Penney.
Hello, and welcome to another edition of Around the Track, the most exciting 15 minutes in wealth management. I'm super excited about our guest this week, Samir Kaji, who is the co-founder and CEO of Allocate, located in Palo Alto, because it's coming at a time when we have just recently announced a new partnership at Dynasty Financial Partners with Allocate. So with that as an introduction, Samir, thank you so much for being with us on Around the Track.
Yeah, thanks for having me today. And Shirl, thank you for the kind partnership and all the support. And it was so fun going to the great Dynasty conference this year.
Awesome. We're excited to have you there. I see you have your Maui hat on. I know that Maui is a special place for you and your wife, and maybe that will come up in the conversation. We'll see. That being said, we're going to jump in. You know the rules. There's only one rule on Around the Track, and that is we need to make our way around that virtual track that you see behind me in Saratoga Springs, which is a mile around. Each one of the questions represents one of the 8 furlongs to make our way around that track together. With that, we're going to go ahead and get started. You know, Samir, in racing and a lot of things in life, how you break from the gate matters. So I'm going to give you what's hopefully an easy one to get out of the gate quick.
And they're off.
Tell us about yourself, personally, professional. Help the audience get to know Samir a little bit better.
Yeah, so my parents actually immigrated from India in 1972 to Canada. So I was born in Canada in 1975, spent about 5 years there. My dad was a civil engineer, decided he wanted to go into real estate. So we started to move based on where his projects were. So we went from Edmonton to New Jersey to Virginia Beach to Chicago to Michigan. All of that was in my first 5 years. Ultimately, we came to the Bay Area in the early 80s. I've been in the Bay Area now, living in Menlo Park today. And I'm definitely a West Coaster now. And I started working in the world of Silicon Valley back in the late 90s. So during the dot-com bubble, had an opportunity to either join my dad's real estate business or do something very different. As a young kid just graduating college, I didn't want to work with my dad. And so I found a job at a bank called Silicon Valley Bank, which is the leader in working with venture funds and startups, was actually lending to companies during the dot-com bubble. And then post the dot-com bubble bursting, I became a distressed lender for a few years. Coming out of it, started to work with entrepreneurs, worked with companies like LinkedIn and YouTube when they first started, really just enjoyed that journey. And then, fell in love with venture capital, which now I've been working in venture for about 23 years, 22 years between SVB and First Republic Bank, both on the company side, but also working with private funds, so venture capital funds, and then ultimately left last year to start Allocate.
All right, so that's a great transition to my next question. There's nothing like hearing the elevator pitch of a great new idea from the founder themselves. And I remember the first time I heard it from you, I was blown away by what you guys were doing. So tell us about Allocate.
Yeah, so this is actually came a little bit from my own personal pain point. So, our, own sort of family was inclining toward alternative investments heavily in maybe the early 2010s. And remember, at that time, we were just coming out of the GFC and people were moving away from 60-40 portfolios of stocks and bonds. We had been in bonds and real estate up to that point. And we said, okay, we need to do some alts. And what we found was alts were really tough. There's so many different fund opportunities. There's limitations of being able to access at the check sizes. And I remember working at First Republic and we started doing alts on the platform. And I thought this was a great opportunity for our clients to diversify, get some, additional returns by putting money into things that historically were only reserved for these big institutions. And then during that time, VC and tech started to become mainstream. Like now everything in the world is being touched by technology in some way. But I realized that venture was such an insular asset class, still very reserved for the top industry insiders, the big institutions. And what people don't realize, unlike other asset categories, the delta between the top venture firms and the medium venture firms and the bottom quartile is massive. In fact, if you look from 96 to 2019, according to Cambridge and PitchBook, the delta between top quartile VC funds and median are about 1,300 basis points, 2,300 basis points for the top and bottom, meaning that you have to be in the top to justify risk return. And our view was people are doing it. These family offices and individuals are doing it by themselves, but they were doing it really poorly. They were investing and they were getting the median, right? So people invest in venture because of diversification, returns, chance for alpha returns, and then ultimately learning about what's next. And people are getting the diversification and learning what's next, but at the expense of returns. And our view was, why shouldn't the individual investor have the same luxuries as a big institution by building world-class portfolios of funds that, historically and should continue to be in the top quartile? And that was really Allocate. And what we also knew is that in order for this to happen, you have to make private investing easier, subscription documents, digitizing everything so that people like you and I, Shirl, can not only invest, but invest without a lot of pain.
All right, awesome. Thanks for the overview of Allocate. Let's take a half step back. And you mentioned that we spent some time just recently together in Houston at Dynasty's investment forum, and thanks for being there and for the support. One of the many reasons why I enjoy spending time with you is I know you're a student of the industry. And so I want to ask you again, from maybe more of a macro perspective, when you look out, pick a time frame, the next 5 years, what are you most excited about broadly within our industry?
Yeah, so I think there's a few things. So number one, obviously we've had a turbulent year in terms of the markets. I always feel like these type of years often bring more opportunity, for those that have the conviction to be able to invest in these periods. But I do think what's really interesting is that we're moving into this world now where private investing is not only more accessible, but more asset classes are being, created for investors to really build great portfolios. So I'm incredibly excited about that. I also think the wealth management industry itself, which is, fairly mature at this point, is finally moving into the next century of both product types, but also creating better experiences for the clients through digital technologies, right? So if you look at how wealth management firms are operating today versus 20 years ago, very, very different in many ways, but it only has started over the last couple of years. And I just see what's coming, on a go-forward basis, and really excited about, the implementation of technologies to really create these on-ramps for investors to have a better experience working with a wealth advisor.
Okay, let me quickly reverse that question. What are you most concerned about over the next 5 years?
So with this, growth in people looking to invest in alternatives, I've seen a lot of platforms, start. And these are platforms that offer clients the ability to invest in everything from venture capital to startups to art to wine to all of these different asset categories. And I do feel a few of them simply are going to provide, their clients with adverse selection by not providing them the very best opportunities. And I do worry about democratization going too far and giving people opportunities in a way that gives rise to just, really bad investing behavior. We saw this during the hype cycle, of course, with crypto, very speculative meme stocks. And I'm worried that, once the markets do get better, you're going to see this new sort of found investments into some of these platforms that just simply don't curate the very best opportunities. So I am a little afraid about democratization going too far.
I think, 20 years in any industry is certainly long enough to start to have a pretty informed perspective on that space. And you mentioned earlier in this conversation, 22 years in venture. Let me ask you, if there's an outsider, right? Someone maybe who for the first time whether it's an advisor considering allocating to venture capital, or it's an investor maybe thinking about, adding venture to the portfolio. What's something, given your perspective, that maybe someone wouldn't fully appreciate about the venture space?
I mean, there's a lot of things. I think venture is just this weird, esoteric, idiosyncratic asset category or industry where it's still pretty insular. Like there's not a lot of information flow. And although you read these big headlines about, venture capital, all the capital that's going into these companies, unicorns, the reality is the industry is extraordinarily small. It's the smallest asset category by far. But I think what people sometimes are surprised by is the disproportionate amount of value that it provides to the economy. So one area is jobs. So if you look at 1990 to 2020, I was just looking this up actually, the private sector jobs have increased by 40%. Venture-backed companies, the job growth from 1990 to 2020 is 1,000%. So in many ways, this is just a representation of the retooling of the economy and the job market toward these knowledge industries, and particularly like within STEM. So I was looking at that number and saying, wow, you think about all of the people that are employed by tech companies relative to the dollars that have gone into, and it's a huge proportion.
I was thinking about, some ways that the audience, maybe who want to get more educated on venture could do that. One of those ways is they could listen to the Venture Unlocked podcast. Tell us about that.
Yeah, and the podcast was actually 5 years in the making. I thought about this back in 2013, and it was around this concept that I was having all these great conversations with VCs every single day, LPs, entrepreneurs, and I really wanted to get some of those thoughts and insights out to the broader market for people to consume, to hear about not only how to invest, but how to run a venture capital firm. Running a venture capital fund is like running a company. And so thematically, the entire podcast was focused on getting great, venture firms on and talking about how they built a firm to last, how they created, how they onboarded talent, how they evolved, how they grew, how they raised capital. And, we're, fortunately about 1.5 years, 2 years into it now, 500,000 downloads. So I think people generally are liking it. And we're excited about, doing these going forward, but it's really democratization of information, because venture is such a weird, hard to understand asset category. We wanted to make sure that everyone had the ability to learn. And we actually do a lot of webinars about just venture 101, just so people can hear more about like, how does the cooking happen within the kitchen for venture, which we think is just a fun way to learn the industry.
Well, congrats on the early success, which I'm sure is going to continue to grow with the podcast. Let me ask you a question around leadership. I think a lot of people who'll be watching this conversation are perhaps some of which are new leaders that are coming into the RIA space, whether they're running their own RIA, perhaps for the first time. There may be, other entrepreneurs within the ecosystem that are perhaps early stage or even later stage. I mean, leadership is something that you have to commit to evolving and growing and learning about on a daily basis. So maybe share a little piece of advice, whether it's something a mentor has shared with you along the way, something you've learned in the role running Allocate. What would you share with our audience around leadership?
So I think I'm still evolving my leadership style. I mean, I think every single year, every single day, you learn a lot about yourself from other people. But fundamentally, I mean, I think looking at my leadership style, right, and I think my team would agree with this. It's very analytical and direct. I like to look at a lot of different data points, be able to synthesize those, and then be really direct, because I think in this world, sometimes we're not as efficient with how we deliver our messages. We're not precise. The other thing I'd say is I probably am more kind than nice at times. At the end of the day, you have to care about your people authentically and sincerely. That does allow you to be not only more direct, but at times that directness may not come off as completely nice. But if you have inherent trust between you and the person, and it goes both ways. Like, I want people to be direct, not nice with me too, because we're ultimately trying to build a world-class company that redefines the private markets. To do that, we have to be open and transparent with each other. And so, really caring about people being kind is much more important than being nice and indirect.
Yeah, at Dynasty, we talk about being fact-based and data-driven in terms of how we make decisions and to them as much as possible, taking some of the emotion out of it. So I appreciate that answer. And we also talk about being, warm on people, but cold on numbers, right? So you want to treat people with respect, as you're saying, but also you need to have a culture of accountability. And sometimes it's, one of the most difficult parts of leadership, right, is making sure that that is an important part of your culture. All right, look, we rounded the turn. We're in the stretch. We're sprinting towards the finish line. The last question I always ask any of our guests on Around the Track really has to do with that big goal that's sitting out there. And it's in racing, obviously, it's the Triple Crown. It's the thing that's almost unachievable. What is that big goal? And this could be personally, could be professionally, that's sitting out there for you, Samir, that almost feels like it's, going to be it's going to require maximum effort for you, your family, your team to achieve it. What would be your Triple Crown?
So I feel in some ways I had a great Triple Crown this year because I celebrated my 10-year wedding anniversary, which, marks 10 years that my wife was able to put up with me, which I, thank her soul for that. But
is that side of the hat, the Maui on the hat?
It was, yeah, it was in Maui. So we got married in Maui in 2012 and then celebrated our 10-year in Maui this year. So it was great. Next year, I think, I'll give both a personal and professional. On the personal side, I've always, played sports and grown up in fitness, and, since COVID, like a lot of people, some of that fitness hasn't been as great as it was pre-COVID. So, my goal is actually to get back to my same, shape that I was as 25, which is, 22 years ago. So I'm going to start a program, which is called P90X in the beginning of the year. And I've committed myself to it. And I'm saying it on this podcast because it's going to force me to do it. So that's my big, personal. Professional, I think we want to build, as I mentioned, a company that people just want to work for. People believe in the mission. People understand that what we do for our clients and what we do for each other. And so to me, there's not an arbitrary number. It's not AUM. It's not number of clients. It's not, a product milestone. It's really building a culture and a type of company that, people hear about and saying, that's a place I want to work for.
That's awesome. Well, Samir, I have really enjoyed this, and thank you for taking the virtual walk around the track with me, and look forward to seeing where you take Allocate in the coming years. And thank you to all of you for tuning in again for another episode of Around the Track.